I think AI is going to be, all boats are going to rise with AI. I think software, once they get over the defensive moves, can start leveraging AI to improve their own efficiency. Every company's going to use AI to lower their own costs and then start generating more and more revenue from it, use their pool of data in a different direction.
If you see the combination of cybersecurity and AI, you know that the threats will become bigger. Do you think, to put it that way, the police can keep up with the thieves?
Of course, I caught a lot of great stocks, Netflix, Apple, Chipotle, because of that. But now I'm much more focused on the financials in terms of, is this company executing to the best of its ability? Is it doing what management says? I think is pretty critical, as well as then with that technical expertise, where is this company going from here? How big can the platform get? What other areas can they easily spin towards? How can they adjust the market and the persona they're selling to?
Welcome to Multibagger Nuggets, where we talk about investing in stocks. Your host, Chris Hendricks, from Multibagger Nuggets, also known as From Growth to Value, invites you to join this podcast at multibaggernuggets.com, where you get much more content, both free and paid. Today, our guest is Muji from Hhhypergrowth. Muji has a deep understanding of technology and investing in tech stocks. He shares his ample knowledge about AI, cybersecurity, and investing. Here's Multibagger Nuggets, where you hear about tomorrow's winners today.
All right, today we have a very special guest at Multibagger Nuggets, Muji from Hhhypergrowth. That's with Triple H, so you really know. Muji is specialized in, you can guess it, hypergrowth, and more specifically, tech. He is very, very, very knowledgeable about everything that is tech related. So thank you for being here, Muji.
Thank you for having me. Nice to finally meet you.
All right. It is. Is there something that I left out of the introduction? That's always something I'm curious about. So what would you add? You have to add. So saying you did well is no option. What would you add to the introduction?
Yeah, I mean, I cover tech names, typically in enterprise SaaS across next-gen security, data and analytics, AI, even some operational platforms. I don't tend to veer into the financial platforms, payments, financial services, banking as much, but typically tend to focus on the software-driven platforms that are B2B, providing enterprise services, and really the infrastructural foundations of cloud services. So and all that.
Has that always been the case, or has that evolved over time?
Oh, that's always been the case for my service. It really comes from my background as 30 years as a software developer, lead architect, designing systems around data, having a lot of security systems involved. And so it's been a world that I've been involved in quite heavily. And so I kind of leverage that knowledge in researching these companies.
If you go back in time, when did you first become interested in investing?
Way back. I was a Motley Fool subscriber back in .com era. So many, many years ago at this point. And so I've been a passive investor for a number of years, but I'd say the last 7 became more active in terms of researching my own investments, seeing what I was interested in, narrowing down what my criteria were for stocks, what I look for in the financials, kind of putting together how the financials tie into the operations of the business. You know, what are these levers? And then I think my expertise in my newsletters, I really focus on where these platforms are going next, seeing the breadcrumbs that they're laying in customer conferences, where are they going in AI, what new markets and adjacencies are they starting to enter? You know, that's kind of where I focus to beyond just the numbers.
Is it something that you really had to learn and, you know, maybe to push yourself to look at the financials more because of your technical background, that if you were enthusiastic about the technological side, that you really had to say, no, Muji, stop first financials? Or did it come natural? Or?
Well, I was always good with numbers. So in terms of, you know, engineering mindset versus financial mindset, they're not too dissimilar. But I was, as a passive investor, I was way more into the story. What's the storyline? What is the solution? Can this be the next big wave? And of course, I caught a lot of great stocks, Netflix, Apple, Chipotle, because of that. But now I'm much more focused on the financials in terms of, is this company executing to the best of its ability? Is it doing what management says? I think is pretty critical. as well as then where, with that technical expertise, where is this company going from here? How big can the platform get? What other areas can they easily spin towards? How can they adjust the market and the persona they're selling to? Those sorts of things. So I think it all really combines into the big picture that I like to cover now.
If you look back, again, we're still looking back. What was your first loser that really taught you a lesson?
I prefer to talk about the winners, but absolutely.
Don't we all?
Losers. But it was more a lost opportunity. Let me tell you about the wonderful world of pig insemination. It was a company I learned about from a farmer relative of mine or farm adjacent relative of mine, I should say. He lived in a farming community. And it was a company that 8x'd for me within a year. And I was just going on hearsay, in terms of, hey, this is a great thing and you should look into it, not knowing anything about the company, not knowing anything about quality of management, and rode that quickly to zero. So it was a company that I had a lot of success in and then absolute failure in as they really mismanaged the thing into the ground. So understand what you are investing in has been one of my criteria from now on. And it's great to lean on others that are more knowledgeable about investing, know what to look for in particular industries, how to read the financials better than I do. Absolutely look for guidance these days, but it's really, as you know, taking it upon yourself to understand the company. What are its levers? What are its warning signs? And because you're the one ultimately in charge of your own money. So
what I have noticed in my own investing is that you kind of overcompensate on the things that you're actually worse at, and that you kind of ignore the things you are strong at initially. So when you start out, have you seen that yourself? So maybe I could talk about myself. I was not so strong in the numbers. I was much better at the story. And no, people. I'm good at people. So initially I thought that I had to leave that out because that was normal. And only later I realized that, people are extremely important. And the numbers are, of course, the check. But, you still have people that build companies and are responsible for new markets, et cetera, et cetera, et cetera.
Yeah, so you've got to trust what they're telling you at a bare minimum, because their incentives are to just hype everything. Obviously, terrible numbers, but it's the greatest quarter ever, So you really have to look through and read through the signs of what management is telling you. I think that's a critical skill. And I listen to every single earnings call voraciously and read it at the same time. I tend to not do it in real time. I like to go after the fact, so that I can have the transcript in front of me as well. And that's a great source of tidbits in terms of what are they seeing, where are they going, but you have to be able to trust first and foremost. And if you see signs of wobbliness there, then that's a huge, at least yellow flag for me.
Yeah, sure.
So it's amazing how it all combines. I think you've touched on the three areas. You've got to understand and know the story and the broad trends within that industry. And that's where I start. But then you have to have the numbers telling you that they're executing now, which I like to project into the future, that they can, if they're succeeding now, they can continue to succeed, but then trust, obviously, on top of all that. So it all combines. You need all those skills. I agree. I probably minimize things in certain ways. And of course, everybody has their own inherent biases, and being so heavily knowledgeable about tech, I had some biases there, good and bad, in terms of I knew firsthand what a house of cards certain platforms could be, certain tech stacks could be. And so I tended to have a lot of distrust going forward, but it's all in the numbers. That's ultimately the hard truth of all these things, barring outright fraud. But audited numbers tell the truth. And from there, then what management says, I like to see the confirmation across those things.
And have you had it that you see a company that is, has a technological superior solution that didn't succeed and that you held on too long?
Yes, I've got an exact example of that. A company called Infinera was a huge play on fiber optics in networking, in data center networking. And this is after the .com era. So you'd already passed that initial rise of fiber optics with JDBC. I forget the company that was huge in fiber optics at .com era. But this is after that, kind of that next generation of networking product that could potentially eat into Cisco. And they absolutely had a technologically superior product. I don't think they executed well. And absolutely, I held on too long because of that technical superiority.
And how did they not execute well?
taking advantage of the new markets they were going into. There's a lot of different areas of networking in terms of long haul, metro, how you're interconnecting data centers together versus interconnecting into the internet in general. And they didn't cross from kind of one area to another well. Mm-hmm. And that was to their detriment, and they didn't live up to potential.
And was it because of, lack of insight, lack of execution? What do you think?
Execution more than anything. They seem to have the right vision, absolutely had the right product. It was not executed.
Yep. Okay. So you have invested for a long time. That also means that you have, lived through several crashes, .com, 2008, the financial crisis. Even for tech stocks, you could name 2022.
Terrible year.
Yeah, terrible year for tech investors. How do you deal with that? Does it become easier over time or not? Or how do you deal with it?
I'd like to think that it becomes easier. And then having just gone through holding a lot of tech stocks into and through 2022, it doesn't get easier because now the amounts are larger and it's, hindsight is always 2020 with these things. Ultimately, I think it does become easier because you start to identify that most of the market movement is short term in that, look at the drubbing that stock names or that software names got in, I want to say end of May, beginning of June. There was a pullback of, 20% in some names just because there was a mass exit from software. And that in turn would have been a great time to invest instead of panic, because then into now July, a lot of those names that I'm in have rebounded off of those panic lows and are now trading at what I think is a much fairer rate. And so I have a long-term mindset, obviously holding many of these things, like I've held CrowdStrike since IPO, let's say, but it's the short-term trials and tribulations provide a lot of opportunities. And I think that's what you realize over time. Some of them more extended than others. Obviously, there was a lot of jubilance in 2021, and it felt like it was jubilance. And of course, I pulled back. Unfortunately, didn't have enough of a cash position as I should have, but did pull back in certain names that were having way too much jubilance, like Cloudflare, I'd say, which 10x'd in a year and a half that I held. Unfortunately, then got into other names that also pulled back just as heavily. So it's kind of a shell game when you're managing your portfolio. And my lesson of 2022 was always maintain cash just to take advantage of those opportunities that arise, especially as we just saw this May.
That makes me think of a question. Suppose I give you $100 million and I say, this is $100 million. It's mine, but you can have a fund. Do you do it? Yes or no?
I would have a lot of questions about it. And I've had opportunities when I kind of arose into FinTwit and with my blog. I really timed a couple of rises in certain names like the Snowflake IPO, the rise of Cloudflare versus Fastly, the rise of security names like CrowdStrike and Zscaler. Managing other people's money it doesn't inherently make me comfortable. I don't run a portfolio service. I run an informational service for kind of the savvier retail investors and for into the professional side. A lot of family shops subscribe, but it's really for me informational purpose, but with the lens of an investor's eye about here's what I'm reading in the numbers, here's where I think things can go from here. But I don't run a recommendation service nor an active portfolio or published portfolio because of that. And then to me, the extra step of having someone else's money on the line in addition to my own, I think brings a certain skill set that I don't have familiarity with in terms of the responsibilities I would then have. Obviously incentivized to make it do well because of the percentages paid, but it's not my bag. For me, the situation now is really fun. It's a win-win for me in that it allows me to process through what I'm thinking with these companies in a very kind of overview way to kind of summarize my articles, and then obviously into the in-depth that I get with some of the technical explanations with these things. But for me, it helps me with my stock selection, I feel like, and keeping a certain criteria for what I own in my portfolio, only having so many names that I feel comfortable owning because I like to kind of cover them or understand them in depth. And so I'm pretty comfortable with my current arrangement. But if anyone's thinking that they need a new partner, contact me.
With 100 million.
Not that eager.
So if this question is too personal, you can throw it out later. But what kind of child were you? And can you see that still today in what you do?
Yes, absolutely. Well, for me, I have to go back to my background as a software engineer. That engineering mindset, was always, I was a creative child and tended to, overanalyze things to a certain degree. But that level of detail then helped me in my engineering career. And that's really what I see helping me today, in that I used to research, ways forward in software platforms, how to architect them, what's the cost benefit, et cetera. And I would boil things down and explain things to an audience above me, management, and below me, customers and users of the platform. So you have to be able to kind of distill things down heavily for the right audience. And that's, I think, what's helped me is that past several decades of software engineering has given me the research mindset in how to research companies, how to go through the product list, understand what they do, go through the financials, go through earnings calls, watch the customer conferences. What are they telling their customers, partners, et cetera? Kind of trying to distill all that down. That's what's helped me kind of carry forward into this creator economy of writing a newsletter, as you yourself are very familiar.
Yes, I am.
And so, that's what's helped me. But, it all stems from childhood and love of computers. Was an avid gamer for a long time. So I was actually a very early adopter of internet, not so much AOL, but bulletin boards on the internet, having virtual communities. So this current kind of reality of Twitter and social media and building communities and relationships through that is all very familiar to me from childhood. So it's all an extension. I feel like a child still, so what the hell?
Well, maybe it's a compliment then to say you're still a child. If you are interested in technology, you must remember November 2022, the launch of ChatGPT 3.5. What did you think?
Well, if you want to get specific, that was the launch of ChatGPT 3. 3.5 came later that year in an invisible update, but that is a very interesting moment. I think it's an important one. It's interesting, the last week, there's been a lot of poo-pooing a little bit about AI, and the costs are more than the benefits, much less the extreme amount of power that it's going to require. There's been some interesting takes from Goldman Sachs and others within the past week. I think it's revolutionary. I think it's important. And I covered it pretty extensively about a year ago, was when I first started covering it, or the beginning of 2023. I kind of veered my coverage towards it much more directly. So this is right around the time NVIDIA started showing like they had a 50% sequential growth about a year ago. So it was a profitable move because I entered NVIDIA at the time, and that has been the strongest performer I've had over the past year.
Yeah, me too.
I think I'm pretty optimistic about the ramifications of it. What I think that people are overreacting to now is the experimentation phase as people try to figure this technology out and really corral and harness it for their own purposes is taking longer than expected because of the hallucinations, because of the kind of unpredictability, certain aspects of it. But we've seen the rise of a lot of tools from the hyperscalers first that's really, I guess, for lack of a better word, dumbing down using AI so that you don't have to understand how to stand up the infrastructure. You don't have to go buy GPUs anymore. There's serverless capabilities that are emerging for business users where you can throw a bunch of business documentation, internal wikis, knowledge bases, contracts. You can throw kind of any PDFs or documents into these no-code platforms that will turn around and create a kind of knowledge base AI assistant over it. But from there, you've got a lot of experimentation as enterprise platforms are trying to adopt it more heavily. But it's been interesting. Like a company I was writing up this week is Samsara, who is the ticker IoT, but they provide kind of fleet management solutions and field services solutions for vehicle and asset tracking in select regions of the globe. And so always been a very heavily AI-oriented company. Even they are adopting generative AI to a huge benefit in that they can have an AI product that not only sits as a knowledge base over their own platform, but can view submitted images. So IoT is experimenting with generative AI not only as an assistant in their platform, which I think is really the baseline of what everyone's trying to do now is here's a knowledge base over my platform. Tell me how I do certain things on the platform, as a customer support agent, basically. But they're having a cull through submitted images and using the AI to understand what's been submitted, combing through the video feeds that they already have an AI on for detecting the traffic around a semi-truck, let's say, and making warnings about, is the driver distracted? Are you following too close? Are you doing harsh braking, etc.? They're leveraging this new wave of generative AI to go through those video feeds for further insights from the centralized platform. And so you've got a company that's able to leverage AI on a number of different levels now. Not only are they embedding it themselves into the AI-driven cameras in the cabs, but they're really able to leverage that pool of centralized data that they're building. And that's where I am getting interested in that. They're just experimenting with it now. They just showed a demo at their IR day at the end of June. It doesn't fully exist on the platform yet, but it shows you where companies can really start to leverage generative AI over the coming year. However, I think my caution a year ago was that I think the giants are going to win, which is the hyperscalers. They're buying up all the GPUs, making their own AI accelerators on top of it. They're going to be the big winner, as obviously NVIDIA is the core provider of all this too. But the giant platforms, say ServiceNow, Salesforce, they're going to leverage AI to remain king of the heap, so to speak. And so I think I always saw AI, or the potential for AI, as defensive, in that you have to create a lot of free services embedded within your platform, like this AI assistant, to better use my own platform. It's a defensive move. Where I'm most interested, or what I'm trying to isolate now, where are the opportunities for companies to spin out revenue generating products on top of AI? And so that's kind of what I've got my eye on as I cull through all these experiments and directions, is who can charge. GitLab is able to charge per user fee for additional AI tiers, one of which is, just a code assistant, but another tier is more automation across their platform and takes over the duties of what you'd need additional headcount for. That's a harder one to navigate, if only because headcount platforms, you're inherently lessening the need for more headcount by adding more and more AI automation capabilities. So that's a fine line. It's the other revenue generating product, where can you create new products entirely from AI that I'm looking at companies like Samsara for, that I think they can spin out from this kind of centralized pool of data that they're collecting. What are some priced products that can spin out from here? That's kind of what I'm looking for.
I also think that you're right. We're in this experimentation phase. And if you look back, each platform actually had that. If you look back to the internet and then, you looked at what's the biggest product in the end, it's probably SaaS. That was 10 years later, or maybe more, before it became commercially viable. If you looked at mobile, the first apps were crap. So how long do you think it will take now before we have, to call it that, the killer application?
Well, that's the $1,000,000 question here. Completely agree with adoption starts slow and then snowballs from there in terms of, the internet itself, in terms of mobile adoption and the rise of mobile apps. I do equate it to those things. It's interesting to how I was cautious in thinking that it would be defensive in terms of these companies adding AI, because of course the leaders are going to be Microsoft, Google, that directly have these AI under their own control. In the case of Microsoft, it's through the OpenAI partnership they have. Through Google, it's, their own Gemini internal models. Regardless, they can sit and then, because they're the hyperscaler and provide their own operational software with Microsoft 365 and Google Workspaces, they're going to provide their own co-pilots, so they're in charge of their own destiny there. Everyone else has to rely on a different company. Mm-hmm. The vast majority, 99% of companies, are going to have to rely on some other company to provide that AI for them. They're not going to be developing it, other than a company like Meta and Tesla are maybe the only two I can think of developing their own, besides countless startups trying to sell AI. So everyone has to rely on someone. I think there's so many rapid advancements going on with AI models right now in terms of just ever larger and larger generalized LLMs. But you've got smaller and smaller models coming at the same time where they're putting more power into a smaller model that can be running on a smartphone, that can be running on a laptop. And then you've got all the countless platforms and ways that you can put together an AI stack from here. It's moving so rapidly, I think companies are having a hard time keeping up in terms of how do I take this model and compare it to this other model? How do I then replace all that with the next wave of this model that comes out from there? They have to provide a faceless service. They're providing AI under the hood within their own platforms. It's a challenge, I think, to adopt. So I knew it would be defensive. Companies would be adding their own thing. I think I didn't foresee how much of a challenge it was going to be for everyday companies to start working with this. Now that we're seeing the rise of these no-code tools, who are, again, kind of really dumbing down the amount of knowledge you need to use it. Companies like Snowflake are bringing AI to their platform itself and embedding it right next to the data instead of you shipping the data out. It's kind of within their protective moat. Databricks obviously doing the same. And so you've got different models of how to put this together now that are still forming. I think now that those are becoming more clear, the experimentation is starting to show positive results. You've got companies like Klarna, saying that it's going to save them tens of millions of dollars in customer service over the next year based on their initial tests. I think companies see massive savings, massive improvements in productivity. They see it's on the horizon. You're just going to have that inherent cautiousness of we have to make sure it works. So now that the tools are finally maturing, I think we're going to start seeing these things go more and more to production outside of, the initial ones of Microsoft Copilot and Google Gemini. And so more and more companies are going to start adopting it. And as kind of that, I guess I'd call it headless AI. They've taken some invisible model out there, built some value add on top of it, leveraging the data within their platform. The challenge going forward is going to be making sure that they've got the way to swap out the engine, the AI, and replace it with what the next best one. You're going to see the rise of these evaluation tools, so I can compare version A and version B of that engine. How can that engine evolve over time? More and more fine-tuning allowed, where you can take these open source models, fine-tune it with your own data to really try to put walls around its knowledge and not focus on it being a generalized knowledge base over the entire internet. I want it to be a knowledge base over my company. And so you're starting to see the rise of all these things. I think the next year, I thought we'd see things by today. We're just barely. A year from now, I think it's going to be a totally different story. Mm-hmm. I think we're going to have, over the coming quarters, a lot of new, at a minimum, embedded AI assistants, much less price tiers, premium tiers, let's say, where they can be providing more and more AI feature sets, and it really starts dropping to revenue at that point, besides just being an added cost.
You touched a problem there as well. I think that, companies will want to use their proprietary data. They're also afraid that security, of course, that they will be used, that they will be scraped even. So how do you think about that? Will that continue to be a problem for the foreseeable future, or will that be solved faster, or what do you think?
There's a lot there. Step one, companies can make the choice today whether they want to outsource their AI or use an open source model and do it kind of themselves. Again, very few are training core models of their own. They're taking an open source model and able to hone it through the fine-tuning process so they can customize open source models. That's one choice. Do I use OpenAI? Do I use Anthropic? Do I use Llama and try to make it my own through some MLOps platform that can do it for me? Each one of those things requiring different knowledge. And again, there's some education that needs to be built up. And really, there's obviously a whole specialty branch here of, I don't want to hire a data scientist. I want to hire someone who can help me leverage AI as a service. And so I think there's an opportunity there for enterprise services to provide those sorts of things. And you're seeing it. Both Datadog and Cloudflare are providing LLM observability. They can sit atop your use of OpenAI, Anthropic, Llama, and monitor the inputs and outputs and track those things over time in order to kind of grade. And then you can do model evaluation, look for drift, try to detect bias, hallucination, all the things that might arise from the use of these intelligent assistants. You're looking at more and more security tools. Companies like CrowdStrike, obviously, Palo Alto, Datadog are looking for AI security in addition, and Cloudflare, in that you need to secure the data that is flowing to it and monitor what it is you're actually sending into the AI. that I think is going to determine that first choice. Do you want to use a closed model from an outside third party? Do you want to use a internal open source model? I think there's going to be a preference for those internal open source models because you can control everything about it. And you can basically hone and use that model specifically for your business and not be sharing it with other services that are outside of at least whatever the services you're using. I call it LLM ops. The use and honing and inference on an LLM is all in kind of these platforms from the hyperscalers or Databricks or Snowflake. I think there's going to be a lot of success in that area, if only because of security and privacy concerns. I can't be shipping all my data to OpenAI or Microsoft OpenAI service, Microsoft's internal version of OpenAI, if I don't want Microsoft to see what I'm sending, or Google, or, these are competitors to a lot of other platforms. And so, it's funny. It goes back to that, like Netflix is using Amazon, but Amazon was a competitor to them, or Target was using Amazon as a competitor to them. Like, you don't want to be shipping your data to, and what could be proprietary customer information of your customers to these platforms without a lot of security guarantees. So I think there will be a rise in open source. I think there'll be a rise in bringing the AI to your data, not shipping your data over a network to the AI as needed. But it depends on the capabilities of these things. And obviously, I think those are going to keep increasing. So there's so much nuance right now. That's part of that complexity that I think every single enterprise has to go through to figure out right now. And so I think in a year, I think we might have a lot more clarity into what paths enterprises from SMB to mid to larger enterprises are going to start selecting. I think there's a lot of room for success for a lot of companies in there, because there has to be different options for different sizes of companies, different security and privacy and compliance concerns, whether it needs to be global or just within the US or just within Europe, let's say, so there's a lot of choices to make around that complexity of how do I watch these things? How do I know what data I'm shipping to it? How do I secure it? Make sure that my information is not accessible to other users of that AI or the AI engine. I don't want to expose it to the third party in any way. So there's a lot of choices to make here, much less trying to do it all yourself with a team of data scientists and creating things from scratch. So there's so much do-it-yourself to enterprise solutions. We've seen that kind of dynamic play out a lot. I always used to equate this when I first got into Datadog. Datadog was the turnkey platform, but you used Elasticsearch if you wanted to do it yourself, or Elastic. Snowflake and Databricks now, where you've got Snowflake as a turnkey data platform, Databricks is more do it yourself. There's room for both options because you never know how much staffing a particular enterprise can throw at it. I think AI is so much more complex of a direction that companies know that they have to go, that it's hard to know how to navigate those waters. Which one do I use? What do I use it for? Those are the decisions you can make internally, but then how do I use it? How do I watch it? How do I secure it? Those are harder choices, and those solutions are just cropping up. Which for me, with the infrastructural companies that I tend to follow, is great because they provide services like that. And if you follow the hyperscaler names, great, because they are providing all those services as well. And I think we're going to see the rise of other AI startups like Dataiku, DataRobot, H2O, that are not about, they're companies that are dedicated to helping companies leverage AI. And so I think you're really going to start to see the rise of services like those.
I think if you, again, draw parallels with, the internet, decisive moment was, of course, AWS renting out its capacity. And you see the same thing happening right now. The hyperscalers allow that you rent GPUs. So do you think that will create a similar explosion of startups, for the internet that resulted into SaaS? Do you think that something similar will happen right now here or not?
Well, they're certainly throwing billions of dollars at NVIDIA to beef up their supply of GPUs. So clearly there's demand. And so, yes, I think it will definitely, there'll be some unlocking. I think the question is, there's so many directions to take AI now that centralized AI is one solution. I'm throwing all my data in a data lake and I'm going to use, Claude or OpenAI to go over it. Claude is from Anthropic. But what about data on device? They're making smaller and smaller, what are called SLMs, small language models, that can now provide a lot of generalized AI knowledge and text generation, text summarization, classification, sentiment detection, etc. on the device itself. You're seeing Microsoft go all in on Copilot Plus PCs. You're seeing Apple add its own Apple Intelligence to its smartphones. There's a lot of space between on-device and centralized hyperscaler AI, which is the networks themselves. I know you follow Cloudflare. They're embedding serverless capabilities for regular developers to leverage AI in any kind of in-network apps they're creating there, which of course the internet is all one giant in-app series of applications, in-network series of applications. So mobile apps and web apps can start leveraging things more on the edge, not in centralized. So there's a lot, obviously the rise of AI supercomputers that NVIDIA envisions in data centers around the world. It's not just the hyperscalers. That's going to unlock sovereign AI. You can have regional AI per country, per geography. That's more honed to the language, culture, rules, and regulations of any particular global area. There's going to be a humongous expansion. And so I think building out that infrastructure now will unlock that future. The question is, how long? And then, of course, in this temperamental market, which is where AI is the best thing since sliced bread over the last year, and then, oh, wait, software's dead and we're going to sell it all. I think AI is going to be, all boats are going to rise with AI. I think software, once they get over the defensive moves, can start leveraging AI to improve their own efficiency. So every company's going to use AI to lower their own costs and then start generating more and more revenue from it, use their pool of data in a different direction. And I think that kind of dual unlock is going to, both in costs and revenue, is really going to lead to this AI revolution that everyone's been projecting since November 2022.
One of the big questions, even probably the reason for the OpenAI drama that we see with Sam Altman out and then in again was, can AI be dangerous in such a way that it would take over? What do you think? The
doomers. I'm way more of an optimist. I think there's going to be, I'm glad it's being discussed. We all saw Terminator, so we know where the doomers are coming from. And so, it's the stuff of science fiction. And, I think AI is really the rise of the generative AI. What I think was important about November 2022 in particular was that it exposed generative AI to the masses. Anybody could see what the potential is by saying, I want this question answered. I want you to generate some text for me. I want you to summarize this text.
I want you to do my homework.
Yeah, do my homework. Write a 5,000 word essay on granaries of Europe. It's a fantastic tool. And obviously the world needs to adapt to it. It's a tool like any other. But I think the doomer part, I don't think we're as close to AGI as what OpenAI would lead you to believe. I think LLMs are a right step on the path. What I identified early with LLMs is AI models do a lot of different things. There are textual-based models. There are vision-based models. There are audio-based models that can generate or understand audio, generate or understand video. What LLMs do is provide a layer of understanding and communication to AI. And so I think everyone can now see the potential of, okay, if we're going to make humanoid robots, it can understand what I say and it can communicate back to me and make itself understood in natural language.
Oh, wow. That was AI.
Some hand signal that Zoom is, I want to know what it is. Zoom apparently has hand signals. I've seen this on FaceTime lately where you can trigger things.
Yeah, if it do
that was magical.
Yeah.
Not so magical in my physical space right now.
What a disappointment.
I do not live in an elven village, people. AI can be layered. And that's what's exciting to me, is that you can take something that understands visual, can process a lot of video, but then you've got an LLM on top of it so that you can communicate with it and can understand you.
So in that sense, it's more like a Netscape to the internet?
It's a communication layer. Yes, I guess that's an interesting analogy, that you're saying it's the viewport to the world a little bit. It's a little like that. It's one step towards AGI, but I think it's going to be a series of steps from here. You've got LLMs understanding text right now. You've got emerging markets that are very interesting with multimodal models, which is LLM for text, but also image understanding. I can speak images. I can speak video. I can generate songs from scratch. So you've got that kind of multimodal capabilities coming. You've got robotics going through huge advancements right now. I think all of these things are combining. Agentic AI is coming, which is where AI can be going through complex workflows. It can be triggering things. Basically, it would be a communication layer over APIs so that it could use other tools. I think it's going to be an evolution like that. Got multimodal emerging now. There's going to be more and more agentic AI coming together, and you're just going to be stringing together these various AI models for more and more capabilities. Ultimately, will that grow into AGI? Yes. But I don't think that it's emerging directly from bigger and bigger LLMs. And I think most people in the LLM market are agreeing with that sentiment.
Yep, I agree. So with your deep knowledge, what is something that you're surprised about not more people talk about?
Certainly, it's been interesting to watch the rise and fall of certain markets. We saw the rise and fall of 3D printing, which I was pretty bullish on. But then it really, I'd almost say, commoditized very quickly. Even though you've got new materials cropping up all the time and more capabilities, people are doing some pretty cool things with it. It wasn't the revolutionary unlock for a lot of revenue. I think you saw it with IoT quite a bit, where IoT had this huge rise. Everybody thought it was going to be the next big unlock of now every device can communicate with the internet. Oh, wait, now think of the security implications. Have now got to protect 10 times the number of devices. And you had these massive bot armies taking over, traffic light cameras and using it to DDoS internet sites. And so I do think there is a coming unlock, which is why I like Samsara and mentioned it before, with IoT. And I think there's an unlock coming with pools of data and being able to apply AI over it. In AI in particular, I think there's a big unlock coming with unstructured data. There's so many videos, images, scans of documents, etc., that people can extract a lot of value from, which is why I still remain in Snowflake. And I'm very interested in Datadog. So those are generally the areas that I'm most focused. I guess I wouldn't call them hidden, but they're not talked about enough. I think the unlock of unstructured data in terms of the general wave of AI, I think that's the more immediate revenue generation areas, not, every company has to put an AI assistant in their platform to help its own users. That's the defensive play, whereas I think unlocking of unstructured data could be the first big unlock of revenue from here.
Yep.
And then the security implications of all this, everything we've talked about, there's so many security.
That was my next question.
More and more IoT devices, more and more data flowing around like this. I never get tired of talking about security because of it.
Go. What are the trends that you're seeing right now and, looking into the future?
Well, we certainly saw endpoint companies like CrowdStrike, Palo Alto move into CNAPP, or cloud security, which is basically adapting their, what was deploying onto servers within data centers and on-premise laptops and such. They adapted it to work with cloud infrastructure. So cloud VMs, containers, serverless functions, which has been highly successful for all of those names. It's now adapting more towards AI protection, data protection, which is identifying where you have sensitive data, where you've got data exposure, monitoring data access, I think is important because you're just seeing all of these ransomware attempts. You just saw it with Snowflake, which, had okay security perimeter, but there was an ongoing campaign to take advantage of companies that were lax in Snowflake's customers that were lax in their security practices and not changing passwords on a regular basis. It just becomes more and more critical that companies are using so many outside platforms. Their data is spread in so many places, whether that's security data, observability data, cloud infrastructure, their own databases. These things have to be connected in certain ways. And so you never know where the breach is going to come from. And so there's just more and more tools emerging to, like attack surface management, something that sits on the outside and just probes the internet portals of your company to make sure that it can't get through. But I think because data is the linchpin for AI, I think it's becoming the most valuable part of a company. It's their proprietary information. It's their customers' information. It's all the transactions. It's all the finances. Companies have to be so much more careful about this. And I can't believe that we're still seeing, a Snowflake account that from 2020, 4 years old, being used to access a company's crown jewels and exfiltrate them like Ticketmaster. And so companies really need to pull their head out of their ass and realize that they have to take this way more seriously. It could be a concerted effort by a nation state, or it could be a group of pimply teenagers in a basement somewhere. But you've got to batten down the hatches and have some kind of oversight over every device and what the users are doing on those devices. And so you're seeing the rise of behavioral analytics, the rise of zero trust, tying the user's actions with the device's actions, with the network actions, so that you can understand what it is this user is doing. You can watch them hopping around and becoming a threat. But you really have to, it's the tools that sit over SaaS applications that I think are going to be valuable to every enterprise. Mm-hmm. You need to protect your identity pool. You need to protect your Office 365 usage, your Workday usage, your Salesforce usage, your ServiceNow usage, whatever major platforms you use to run your business. There needs to be some overarching protection atop it. I've been pretty bullish on zero trust now for about 5 years. And I still think that we're just in the early innings of it, because companies clearly, you look at Caesars and MGM hack in Las Vegas last year to Ticketmaster 2 months ago. And so these can be potential threats to the entire existence of your business.
Mm. I still remember, I don't have a tech background. And I still remember the first time that I read about zero trust, and I thought, why doesn't every company have zero trust? I didn't understand. And as you say, we're still very early. If you see the general adoption of just that basic principle, I think the problem may also be that companies still see security too much as an expense.
And for sure. It's always been viewed as an expense. It's not revenue generating expense at that. I think the inherent problem in wider adoption of zero trust is IT departments themselves, because they've got all this institutional knowledge about, I need to build this moat up around my business network. It's going to put me out of a job to outsource network security somewhere else. And that's not true. It definitely would require a smaller IT department, but you need IT departments either way. I think it's finally reaching the board level. We've seen it maybe in the past year. Obviously, the big change was at the end of last year, the US government and SEC changed the rules for reporting breaches. I thought that was a pretty pivotal moment. And that was a good one to invest into, because then kind of in December, we saw a huge rise in security names as it really started to take hold. But companies and the boards themselves are becoming responsible for the security and risk factors, understanding them. And so I think at least public companies, you're starting to see more and more understanding. But then what about the long tail of other enterprises down to SMB from there? I think there needs to be wider adoption of these things. Companies aren't scared enough about the ramifications. Mm-hmm. But just look, 500 million usernames, passwords, social security numbers, etc., all released to the wild.
Mm-hmm.
So take data security seriously.
100%. What you see, or what I see at least, and maybe I'm wrong, is that security companies go more and more into each other's territory. Do you see that trend continuing? And do you see, maybe mergers, or I don't know, are they going to compete on each other's territory more and more? Or what do you think about that?
I think all of them are moving towards what Palo Alto likes to call platformization. I think a lot of these next gen security companies, maybe Okta has decided to stay in its own lane more than most.
Yes.
A little to its own detriment, because it's poorly managed in other ways, in particular the acquisition of Auth0 and its integration, mm-hmm. much less their lackadaisical approach to their own breaches, or tangential breaches to their platform, we should say. But I think you will see more and more mergers. You obviously see a lot of success from startups getting acquired. And so Palo Alto's been obviously acquiring many companies over like a 5-year period in 2018 to 2022, let's say, and then took a breather and is back to acquiring. Cloudflare, Zscaler have all been acquiring. I think you could see a merger. In particular, CrowdStrike and Zscaler are very complementary to each other, even though they are starting to both be in posture scanning of cloud infrastructure, so cloud security, mm-hmm. what's known as CNAPP. They're both getting in that area. But
they also have a partnership, of course.
They have a very deep partnership that's been successful for both of them. Palo Alto's next-gen security division, anyway, has always been like CrowdStrike plus Zscaler.
Mm-hmm.
And so, that's a massive merger you might see. But you just saw it with Splunk. Splunk got acquired by Cisco.
Yep.
Thoma Brava has been buying out
a lot
left and right.
Yes.
There's another one, I want to say they're Francisco Partners, is buying up a lot of identity companies, Okta competitors, and combining them. And so you're seeing some of the not quite as successful platforms get eaten up. And I think at some point, one or the other of the CrowdStrike and Zscaler founders are going to say, hey, I'm ready to retire and drive F1 cars. Let's merge here. It's been interesting. I think where, it's not part of my thesis with any of those companies. It's more where they're going. And, with CrowdStrike, I can't speak highly enough about how well they've been able to expand from one direction, endpoint, into cloud, into identity protection, into other areas, some through acquisition, some built themselves, but every step has been pretty perfect. So.
It is. And George Kurtz plays a huge role there. Of course, he goes back as far as you do when it comes to cybersecurity. He was actually probably before you in the 90s already publishing about cybersecurity, if I'm correct, or was it?
Yeah, I think he's been a long timer. Mm-hmm. So I want to say he came out of. So he had a Checkpoint. Yeah, that's it. You had all those antivirus companies of Symantec, McAfee.
He has a history at McAfee. I know that, but he may have been at others as well.
It's all of those companies. Security is such an interesting industry, and I was inherently cautious to invest in it because you saw the quick rise and quick fall of so many, like FireEye, I'd say. Mm-hmm. Mm-hmm. And especially as the networking companies started to get more and more into security, like Cisco, kind of losing their core focus, and then you see Arista kind of spin out as starting to eat their core market, and so. It's been interesting watching the rise of what were point solutions become platforms, start to bundle the products more and more. You haven't quite seen the unbundling yet. I think for me, I always like security in that it's security depth through layers. Like you can stack a lot of these softwares together. And then you had paradigms like XDR emerge where deeper interconnections between platforms so that one platform could leverage the kind of threat intelligence and actions seen in the other platform and vice versa. But now you're seeing kind of that platformization emerge out of Palo Alto, who really wants to do everything. They want the networking, they want the zero trust, but they put zero trust over their existing networking hardware, of course. So they had a pretty impressive pivot.
I really underestimated them for a long time, I have to be honest.
Oh, for sure. And it was, as an owner of CrowdStrike and Zscaler, it was a little disappointing that they did so well. I thought there'd be more market for those companies to chew up. But Palo Alto pivoted extremely well, especially in transitioning its own customers. And so it didn't bleed customers like a lot of the other security names, I'd say like Checkpoint or Trend Micro or something like that. And so, but now it's really a commoditized market, but I think the importance of it is in the headlines every single day.
Mm-hmm. If you see the combination of cybersecurity and AI, that the threats will become bigger. Do you think that, to put it that way, the police can keep up with the thieves?
Well, certainly any kind of police or FBI or anything are not going to keep up because they haven't gotten thus far.
Yeah.
But can the gatekeepers keep up? I think so. I think through those platforms, they're improving detection down to seconds at this point. And so when you can stop data filtration in action, it's crucial. It can't be responsive. It has to be proactive. You can't, yesterday I lost 100 gigabytes of proprietary data. No, you need to see it in action. You need to identify when someone's probing your system and moving laterally in your networks and accessing data that they don't normally access, or identifying access patterns that aren't normal, such as, hey, this person is downloading a lot of data and they shouldn't be. So it's, the tools are improving. They've always been AI driven. I think the better solutions, like CrowdStrike has always had AI at its core. SentinelOne always had AI at its core. Palo Alto. And so I think the question with generative AI it's what the threat actors are going to start doing is obviously they're able to much more quickly, like phishing attempts. They can hone phishing attempts into much more natural language. They can make it seem like it's right out of the mouth of a CEO. Hey, send this
even with the voice
credential to someone else, or even with deep fakes. That's where my concern is more the social side of things are going to continue to be very exploitable, which, such as calling a help desk. Hey, I'm having trouble accessing my laptop, making it seem like a realistic request. And that's where they're going to continue to chip away. Obviously, AI automation is going to help probing tools and things like that. But there's such a human element to attacks that it's all important now. Will AI make it worse? No, I think AI is kind of going to be the equalizer between sides.
Yep. All right. So the human being remains the weak link, right?
Oh, big time. Social engineering is probably at least a third of the reason for most major attacks. So.
Yep. All right, Muji, this was a great conversation. Thank you very much for sharing all of your knowledge with us. And where can people find you?
I'm at hhhypergrowth.com with 3 H's, or at Hhhypergrowth on X/Twitter. And if you would like to listen to people talking about, or a person talking about next-gen security, data and analytics, AI and machine learning, please come my way.
There you go. And it's a good way. Thank you very much, and see you. Bye.
I hope you enjoyed this content. None of this is financial advice, so don't buy stocks only based on this information. Chris and the guests may have positions in the stocks they discuss. Temporarily, all content of at multibaggernuggets.com is free, so don't miss out and subscribe today.